Breaking news for anyone thinking about buying or selling a home in 2025. The housing market just took another unexpected turn. And if you're confused right now, welcome to the club. What's happening could affect your next move way more than you think. And even the experts are scratching their heads on this one. I'm breaking down the latest data, the shocking trends nobody saw coming, and most importantly, what this means for your actual wallet in the months ahead. Spoiler alert, it's not all doom and gloom, but it's definitely not boring either. So here's what's happening. As we move through 2025, the housing market is in this weird twilight zone that's confusing literally everyone. Home prices are still sky high. Mortgage rates are chilling in that 6 to 7% range, which feels painful after what we got used to. And inventory is still way below what any sane person would consider normal. But here's where things get spicy. The market is changing in ways that are catching both buyers and sellers completely off guard. If you want the latest updates on the housing market and how these changes could actually impact you, make sure you're subscribed and smash that notification bell. Let's talk numbers. The median home price across the United States is still sitting at levels that make a lot of potential buyers want to ugly cry. We're not seeing the massive price drops that some people predicted. Why? Because there's still a major inventory shortage. Here's what that means in plain English. There simply aren't enough homes for sale to meet the demand. And when supply is low and demand is steady, prices stay high. It's basic economics. The same reason concert tickets cost your entire paycheck when your favorite artist comes to town. But here's where it gets weird. Sales volume is actually down compared to pre-pandemic levels. Homes are sitting on the market longer than they did in 2021 and 2022, when houses were basically selling before the for sale sign hit the lawn. And more sellers are cutting their asking prices, which would have been unthinkable just a couple years ago. The answer is what experts are calling the lock-in effect. Millions of homeowners locked in mortgage rates below 4% during the pandemic. Some people are sitting on 3% rates, which in today's world feels like finding a unicorn. Now, with rates in the 6 to 7% range, they're not selling. They're staying put, because why would you give up a 3% mortgage to buy a new house with a 7% mortgage? The math just doesn't work. This is creating the most bizarre situation I've ever seen in real estate. People who want to move can't afford to. People who want to buy can't find enough options. And the whole market is kind of just frozen in this awkward staring contest where nobody wants to blink first. Now let's talk about what's different in 2025. Regional variations are becoming massive. Some Sunbelt cities that were red hot in 2022 and 2023 are cooling off faster than your coffee when you forget about it during a Zoom call. Cities like Austin, Phoenix, and parts of Florida are seeing more inventory, longer days on market, and actual real-life price reductions. Meanwhile, other markets are still super competitive. Cities with strong job markets and limited land for new construction are holding steady or even seeing prices inch up. It's like the housing market decided to have multiple personalities depending on your zip code. Here's something catching a lot of people off guard. New construction builders are offering serious incentives right now. We're talking mortgage rate buydowns, closing cost assistance, upgrades thrown in for free. Builders are competing far for buyers. And if you're in the market, this is something you absolutely need to pay attention to. But there's another cost that's absolutely exploding and not getting nearly enough attention. Home insurance. This is huge, especially in certain states. Oklahoma, for example, is one of the cheapest states to buy a house. Sounds great, right? Plot twist. It's the third most expensive state for home insurance. A new report shows that Oklahoma homeowners can expect their home insurance to jump by 8% this year. That's around $600 more annually. And it's not just Oklahoma. Florida, so Louisiana, Texas, basically any state dealing with hurricanes, wildfires, hail, or tornadoes. Insurance costs are skyrocketing. Here's why insurance costs matter so much. When people calculate whether they can afford a home, they focus on the mortgage payment. But insurance, property taxes, and maintenance costs can add hundreds or even thousands of dollars to your monthly expenses. In some high-risk areas, insurance premiums are adding $300 to $500 per month to the cost of home ownership. That's a car payment. That's a huge deal that can completely change whether you can actually afford that dream house. So what can you do about rising insurance costs? First, shop around. Different insurers price risk differently. Second, consider raising your deductible. If you increase the amount you'd pay out of pocket, your monthly premiums go down. Third, protect your property. Installing impact-resistant windows, upgrading your roof, adding storm shutters, these improvements can lower your premiums. Now let's address the big question everyone's asking. Is the housing market going to crash? Should I wait for the crash? Here's what the experts are saying, and I actually agree with them. No, not like 2008. The lending standards today are completely different. During the 2008 crash, banks were giving mortgages to anyone with a pulse. Today, lending is tight, buyers are qualified. Most homeowners have significant equity. Banks learned their lesson. Plus, that inventory shortage acts as a floor under prices. You can't have a crash when there aren't enough homes to meet demand. But that doesn't mean everything is great. Affordability is at historic lows. Young people, first-time buyers, middle-income families, they're getting squeezed out. That's not just a statistic. That's your cousin who can't move out, your coworker who's still renting, your friend who's given up on home ownership entirely. The Federal Reserve's decisions on interest rates are still driving mortgage rates. Most experts don't expect mortgage rates to drop back to 3 or 4% anytime soon. Those pandemic-era rates were an anomaly. Historically, 6 to 7% is actually closer to normal. So if you're waiting for rates to drop dramatically before you buy, you might be waiting a long time. Like your kids might be in college by then, kind of long time. Let's talk strategy. What should you actually do in this market? If you're a buyer, trying to time the market perfectly is almost impossible. Nobody has a crystal ball. Instead, focus on your personal situation. Can you afford the monthly payment, including insurance? Are you planning to stay in the home for at least 5 to 7 years? Do you have a stable income? If the answers are yes, then buying might make sense even if conditions aren't perfect. Real estate is a long-term investment. What happens in the next year or two matters less than what happens over the next decade. If you're a seller, pricing is everything right now. Homes that are priced realistically are still selling. Homes that are overpriced are sitting there collecting dust. The days of listing high and getting multiple offers over asking, those days are mostly gone. Work with an experienced local agent who knows your specific market. National trends matter, but local conditions matter way more. Here's something interesting that gives me hope. Demographic demand is still strong. Millennials, the largest generation, are in their prime home buying years. Immigration continues to add to housing demand. People still need places to live. This demographic support is one reason experts don't expect a crash. The underlying demand is real and sustained. One more thing about regional differences. If you're considering relocating, 2025 might actually offer some interesting options. Remote work is still giving people flexibility about where they live. Look at cities with strong job growth, reasonable costs of living, and good quality of life. Sometimes the best opportunities are in places you hadn't considered. Let's wrap this up with the bottom line. The housing market in 2025 is not crashing. It's normalizing. It's adjusting. It's finding a new equilibrium after the absolute craziness of the pandemic years. Prices are still high, but stabilizing. Rates are higher than recent years, but not historically extreme. Inventory is low, but slowly improving in some areas. It's not great, but it's not the apocalypse either. For buyers, it's a challenging market, but not an impossible one. You can still buy a house. It just takes more patience, more strategy, and probably more compromise than you'd like. For sellers, realistic expectations are crucial. This isn't 2021 anymore. Price it right or watch it sit. For everyone, understanding the local market matters more than ever. Your city, your neighborhood, your specific situation, that's what actually matters. And don't forget about those rising insurance costs. Factor them into your calculations. They're a bigger deal than most people realize. The housing market always cycles. We're in a particular phase right now, and it won't last forever. Make decisions based on your personal circumstances, your financial situation, and your long-term goals, not based on trying to time the market perfectly. Thanks for watching. If you found this breakdown helpful, Subscribe for more urgent housing market updates. Drop a comment below and let me know what housing market questions you have. I'll see you in the next one.